Oil is trading in the narrow range on Wednesday. There are no drivers to push prices higher. At the same time, the weak US dollar keeps oil from further decline. The ruble benefits from stable oil prices and aims to break through the 73 level against the US dollar. Brent continues to consolidate gains near the mark of $49 per barrel. Today, the main focus is on the short-term decline in oil supply caused by the pandemic. Markets also anticipate the start of the vaccination program and the adoption of a stimulus package in the US. Traders are evaluating the importance of each factor. While the market sentiment swings between positive and negative, oil quotes are fluctuating up and down in the narrow range. In the morning session, oil came under pressure from the bearish report on crude oil inventories. According to the API, oil stockpiles in the US rose sharply last week by 1.1 million barrels, in contrast to forecasts for a decline. Today, traders will wait for the official industry data from the US Energy Information Administration, which is expected to report a drop of 1.2 million barrels. If the data is confirmed, then oil will continue the downtrend. Global oil benchmarks opened the day in the red zone. However, oil bulls managed to gain control and pushed Brent above $49 per barrel. So Brent gained more than 1%. The North American crude was following a similar trajectory. As a result, WTI edged higher above $46 per barrel. Despite improved market sentiment, oil is still at risk of falling. The main negative factor to weigh on the prices is the imbalance between supply and demand. In addition, the OPEC Plus members are going to increase the output volumes in the near future. What's more, the market is already flooded with oil from Libya and may soon see more supply from Iran. Therefore, short positions on oil may still be relevant. On the other hand, the upcoming vaccination program will definitely support the market. If the COVID-19 vaccine helps to curb the virus spread, oil is sure to rise, as investors will anticipate a boost in demand after the restrictions are lifted. The oil's rally suggests a rise in the Russian currency. The buy positions on the ruble look more attractive now amid higher oil prices. On Tuesday, the ruble continued to advance against the US dollar. However, it has slowed the pace of growth over the past few days. At the moment, the dollar-ruble pair is holding in the narrow range. But it seems that the bulls are not going to give up and still aim at the area between 71 and 72 rubles per the US dollar. The ruble gains additional support from the local bond market. Besides, the increased risk appetite is also favorable for the Russian currency. The high-yield instruments are extending gains on forex, while the US dollar and the Japanese yen are losing ground. And this is because investors are very enthusiastic about positive vaccine news. Meanwhile, the US lawmakers continue to negotiate new stimulus package. The fact that the US Treasury Secretary has proposed a new fiscal stimulus plan to Congress was a positive sign for investors. If the background improves, the dollar-ruble pair may break below the strong support level of 73. In recent days, the ruble has been steadily rising and closed several consecutive sessions with gains. However, it's still too risky to count on further uptrend. Analysts predict that the ruble may significantly depreciate by the end of the year. And that's all for now. Thank you for watching and stay tuned.